Good afternoon, everybody. Welcome to the Trader Merlin Show. Hope you're all ready for a fun show today. Real quickly, let me just make sure my microphone is dialed up. As I told you, when I reset this computer, sometimes it does all kinds of weird things. So I'm just going to make sure that my microphone is set to a nice, good level for you. Let's go see, make sure that's good. Yep, we're good. Okay. So today's show, as you guys saw by the title, is a little bit different. And let me explain the situation. I know many of you here are active traders, and you understand what it takes to be a day trader. I hope that the gentleman is here today. My neighbor across the street had asked me to teach his son day trading, and unfortunately, I don't have time to do a one-on-one type of education lesson on day trading. It's a complex thing. So what I thought I would do was I invited him to watch the show. And Mason, I hope that you're here today so you can ask some questions, and maybe I can set some sense of reality to the expectations of a day trader. Because let's be honest, when we think of day trader, I think that social media has done a horrible job of sensationalizing how easy day trading is, right? You just turn on your computer, you hit a couple buttons, and you walk away with $5,000, $10,000, and man, life is easy, right? I'm sure everybody here would love it if it was that freaking simple. Unfortunately, when you look out across YouTube, the vast majority of these people claiming to make so much money, they're losers. Not in their personal lives, but financially, they're losing money. And what they're doing is they're selling you this illusion that day trading is the easiest way to make money. You don't need a degree. You don't have to know anything about the markets. It's just literally wake up, hit a button, turn it off, and you made a bunch of money and go surf. I wish it was that simple. It's not. Now, the audience here, Harrison says, day trading may involve day heart attacks. It certainly can give you heart palpitation. Let's hope, Harrison, that we don't get heart attacks out of this. What I wanted to do is, I'm not trying to deter Mason or anybody who wants to be a day trader in any way, shape, or form. I think that is definitely doable. However, it's not as simple as just flicking a switch and you're all of a sudden making money. Trust me, after 28 years of this, I would contend, for me personally, the hardest style of trading to be consistent at and make a living at would be a pure day trader. It's very hard, and I'll explain some of those risks here as we go. So I don't see Mason in the chat. Mason, I told your pops to watch the show today. Maybe you'll get to watch the recording of this one, but I hope that this makes it to you so you get to see at least an honest approach, right? I'm sure that you can go onto somebody's YouTube channel and they'll tell you how much money you're going to make, and it's so easy, and just sign up for their class or their school. It's not that easy, my friend. Let me start off by just running through my thoughts on it. So ultimately, everybody in this room knows, or at least the vast majority of the people in this room knows, that trading can be broken down into three really distinct trading styles. You have position trading, which is essentially positions that last months to years. And this is really what your parents have been taught, right? You know, your mom and dad have 401ks through their work, et cetera, or retirement accounts. And that's what position trading is, saying long-term stuff here. You're not going to mess with it on a weekly basis. It's generally years out. This is the buy and hold investment philosophy, which is a belief that over time markets will go up. And the truth is, over time, markets do go up. That's not wrong at all. The challenge you have here with position trading is sometimes markets go down for months to years, and that could eat away at your retirement account. So what you need to understand is a little bit about market timing. So if the markets, I'll give you an example of position trading here. If we go out and look at, let's say, the S&P 500, which in my opinion is the market. This is a monthly chart of the S&P 500. So this is 500 stocks, actually it's 503, going all the way back into 1997. And as you can see, markets do go up over time. But if we zoom into what happened here in the late 90s and early 2000s, you know, these periods markets went down for 2 years here, over 2 years from 2000 to 2002, and then from 2007 to 2009. You know, this could absolutely devastate your long-term position account. So even though most people do position trading, it still is important to understand market timing. Your second one on here is swing trading. Swing trading is trades that last a couple of days to a couple of weeks. And generally, by definition, It's buying something at a low and selling it when it reaches a swing high. They call it a swing high or a swing low. And just timing those little fluctuations in price that, again, may last days to weeks. And then your third is what you would like to do, which is day trading, which means less than 1 day. So in looking at this graphic, you've got to understand right away, and I know there was a couple people who have asked me about this, so I hope I get more people, especially for those of you who have friends that want to talk about day trading, maybe send them to the show. You have to understand that if you're trying to make profit in 1 day, there's a lot of stress that you have to make money in the next hour or 15 minutes or 3 hours, whatever time you decide to trade. With a position trader, I've got months to let my idea, my plan come to fruition, right? I could sit here for 6 months and go, well, it hasn't done anything, and then it slowly starts to go up. We each have our own niche, our style that we like, but those are your 3 major breakdowns. And without question, the hardest one on here is day trading. And as we progress, I'll show you why day trading is so difficult. So let's talk about what it takes. And feel free to chime in, everybody here. We've got a lot of people in this room who are active traders, and I keep emphasizing if Mason is here to chime in, at least say hi. Let me know that my effort to illuminate you on trading and the reality of it is not wasted. So what does it take? First and foremost, you've got to have some market knowledge, okay? You can't just jump into the stock market because some guy on social media said, hey, you should buy this stock, or some President Trump says, you gotta buy chip makers, they're huge, you're gonna be so wonderful, you gotta buy chips, right? That doesn't work. It may work on a trade or two, but what is really important here is consistency, right? Your goal, I know what your goal is. Everybody's goal is to make money, but I would argue that it's not your goal. Your goal is to be consistent, and if you can be consistent at trading, then the money will just literally fix itself and put it in your account, as long as you're consistent with the right things. So you got to have market knowledge. And, for Mason, I don't know what you want to trade. My assumption is that as a 15-year-old, you're probably still in school, and a lot of your peers or friends are talking about how they're day trading penny stocks. They're going to lose everything that they have invested in the markets over time. Penny stocks are absolute gambling. There is no consistency, none, that you can get out of penny stocks. I will put any amount of money on it that there is no long-term successful penny stock trader. Oh, but what about Timothy Sykes? Timothy Sykes turned his bar mitzvah money into millions of dollars. Yeah, he makes money off of giving people stock picks and selling the newsletter. He doesn't make money from trading penny stocks. It's a loser's proposition. So you got to know your markets. Do you want to trade stocks, futures, forex, options, heck, cryptocurrencies, right? There's a lot of things that you can trade. And maybe in future lessons, I can break those down and let you know which ones might be best for your situation. So you got to know markets. Don't go in there without an understanding, because the markets will tear you a new one if you don't know what you're doing. Number 2, you've got to understand technical analysis. Now, I would encourage you, anyone who doesn't understand technical analysis, to watch this show. I do a lot of technical analysis. I do things very simply. When I was, actually I didn't start when I was Mason's age, but when I was in my 20s, I was looking at charts all day long. I just immersed myself into it. And as Margaret says, I love patterns. I believe that patterns are a reflection of human behavior. And if you can understand how people are going to act in a certain situation, then you can capitalize on that reaction. It's a horrible analogy, but they always say if you want the best seat in the movie theater, all you have to do is yell fire, because everyone runs out of the cinema and you got your seat. If you know the reaction from a crowd, then either exploit it to take advantage of it or learn from it and see how you can optimize it. With trading, it's okay to be cruel, right? If someone is suffering in the stock market, like right here, I'm looking at the S&P 500 from 2007 to 2009, and given Mason's age, he wasn't even born yet. That's okay. No worries, Mason. I'm not picking on you. This was a lot of pain in the marketplace. The markets were selling off. And as you can see here, the market dropped 58%. So for anybody who is in a 401k, your parents, you can probably ask them, like, hey, Dave, how bad was your 401k in 2007, 8, and 9? He's going to be like, Mason, I don't want to talk about that. That was a bad time. Because people were stressed, right? They lost 58% of their money was just evaporated. So when that type of pain occurs in the market, now, again, I don't like to see anybody suffer, but for me, it was an opportunity because I had capital on the sidelines because I felt the markets are going to crash. If you don't believe me, go to YouTube, type in my name, type in Merlin Rothfeld CNBC. You'll see the episode that got me kicked off of CNBC in January of 2008, saying the markets are going to crash in a big way. And I was fortunate enough to follow my plan and buy when this market sold off. So essentially, I was helping these people because they wanted to get out. They were in pain. They sold their positions. I bought at a lower price. And I'm doing a service. I'm trying to help out. So you've got to understand price analysis, technical analysis, right? What do these charts tell you about buyers and sellers on a daily basis, right? There's so much we can look at, and it's all different marketplaces. For example, I could bring up charts of gold, silver, corn, wheat, soybeans, you name it. I could bring up those charts. Toby says, just keep putting $50 weekly in a Roth for 40 years. I would totally agree with that. Totally agree with that. If you're long term, and at 15, if you put $50 per week in a Roth IRA and just bought the SPY, you'll be extremely wealthy by the time you retire, Mason. I can almost guarantee that. It's actually, I would say I can guarantee you that because markets go up over time. The only issue would be that right as you get near retirement, the market drops 50% and eats away your profits. Again, market timing. So you need to understand a little bit about fundamentals. And I don't want you to think that you need to look at a company and say, oh, what's their earnings? What's their, their ROI and ROE? All those, that doesn't matter. What you need to know is if you're trading like Microsoft, when does Microsoft report? When are their big announcements? That's your biggest challenge for you. So a little bit of fundamentals, and I would argue it's more important to understand macro, what's happening in the market. For example, tomorrow at 9:30 in the morning, Pacific time, we have Jerome Powell, who's the chairman of the Federal Reserve. We've got Governor Bailey, who's the chairman of the Bank of England, and you have Yoshida, who's the chairman for the Bank of Japan. And they are all speaking tomorrow at a press conference. This could have huge impact for our markets. So as a day trader, you have to look at this two ways. Number one, it increases risk because market volatility could be significantly higher. And number two, it gives you a lot more opportunity because market volatility is going to be higher, right? It's a double-edged sword there. So fundamentals is a key thing. I'll try to rip through this. Startup capital. You're going to need some money, right? I'll walk you through some of the parameters here for stocks if you want to trade stocks. But if you want to day trade stocks, you have to have a minimum of $25,000 in cash, okay? I'll explain here in just a sec. Lastly, I need you to have a strategy. What I don't want you to do, Mason, is simply go, oh, I'm just going to buy this because my friend in school told me to buy it. That is the stupidest way of trading. It's about looking at this. It's about looking at price charts and saying what gives us a higher probability. Well, we've been talking about the S&P 500 on how once it breaks the blue skies, you usually get a nice big move. Now, most likely, based off of patterns, we're going to have a retest here soon. My guess is probably next week. I think next week we'll get a retest of this after the 4th of July, going into the week where where President Trump will have to make some tough decisions about tariffs. We've also talked about things like the US dollar, right? And it's important to know when these things break key levels, what is the impact for the market? What's the impact for your specific trades? Here is some of the rules for pattern day trading. If you trade stocks, you have to have $25,000 in your account and it must be a margin account. Now, I'll be honest, you probably don't have 25 grand in your account, my guess is, and you could trade other markets. For example, you could trade options, which is one of my favorite asset classes, and you need a lot less capital there. The challenge is if you're trading options, you still have to know how stocks move. So an option is a derivative. So for example, here we've got Microsoft. You got your Microsoft chart right here. You could try to buy, one share of Microsoft. That's going to cost you $497 per share. Or you could use options, which is a derivative, and you can control much more than one share for a lot less money, but you still have to understand how to read these price charts, right? You could trade futures products. So like here's the S&P future. If you want to day trade, this is probably your best way to go. The S&P 500, trading an E-mini. If you take it home overnight, you need about $14,000, maybe $15,000 to control it. If you day trade it and you're out by the end of the day, most places will let you slide for $500 per contract. I say that cautiously because I'm worried by telling you that, Mason, and anybody else who wants to start a day trading, that you're going to run to the futures side of things and put yourself into too much risk because you still haven't educated yourself on how futures markets work, what lock limits are, contract specifications. Oliver says minis are good. Yeah, the mini still you need $500 for the S&P, but could you go micro, right, and go even smaller? Absolutely. And I would recommend, if you get started, to trade micro futures, right? The really smallest little pieces. You're not going to make a lot of money, but that's not your goal, right? If you're starting off trading and you're just learning how to be a day trader, your goal is not to make money. Your goal for the first 6 months, in my opinion, should be to break even. And every trade should be a learning lesson. Okay, here's how I do this. Here's how I do that. These are the mistakes I made. Let me fix it. Give yourself 6 months of just, small little losses. And if you're trading a micro, you might lose a couple of bucks per trade, a few dollars per trade. That's fine. But if you went and traded, an E-mini, you could be losing thousands of dollars per trade. So definitely a big change there. What else do I have? Tools and technology. Are you going to use a Robinhood account? No, you're not. Robinhood doesn't really give you great trading tools. They're a cheap platform, but you're going to need a brokerage account somewhere. And again, it really depends on where and what you would like to trade. And Mason, feel free to reach out to me and let me know what you want to trade, and I can maybe give you some guidance there. But if you are wanting to trade futures, there are certain brokers that are better than others. Same thing with options. Stocks are pretty much the same. Robinhood gives you very basic platforms and not a lot of technical analysis pieces. Whereas if you went to something like TradeStation or Thinkorswim, you can have much more flexibility with that platform. But that, I think, is more of an elevated tool for you down the road, right? You're going to have to start off slow. So you need a brokerage account. You have to have a trading platform, which I just mentioned. You're going to need internet connection. I put here a dedicated computer. I trade with dedicated computer. I don't like to do anything else in that computer. Now, lately, I've been doing a lot more from my phone, but I'm also very experienced at it, and I know my strategy, my stop loss, etc. Now, part of your trading plan, obviously, as a 15-year-old, you don't really care about a plan. You just care about making money, right? You're like, I just want to make money. Well, forget about money. Think about your profession or your career as a trader, right? If you want to make money, it's certainly possible. But if you focus on being a good trader, then you'll make money the rest of your life, as long as you keep studying. So you're going to have to ask yourself a few questions. Number one would be, like, what markets do you want to trade? Are you trading, like I said, the S&P futures? Are you trading corn, wheat, or soybeans? Are you trading individual stocks? Which markets? Which sector? What time of day are you planning on trading? Since you're still in school, it makes it very difficult for you to be a very active day trader. Now, the good news is you could start off at the wee hours of the morning when the equity market's open here in California and start trading at 6:30 in the morning. Or maybe you want to just trade the afternoon. What I would recommend is, if you are planning on a certain time, to be consistent at it. Don't, like, on Monday trade the open, and then on Thursday you trade the close, and on Wednesday I trade the middle of the day. You'll never learn the nuances of those times of day, right? You've got to... It's kind of like Mason surfs. Him and his brother go surfing all the time. I see you guys right out. When you go surfing, you do your research on when the waves are coming. When the tide's going to be a certain level for you to go out and trade. You know your market, so you're not going to go waste your time. And also, you have certain spots that you go to all the time. Certain beaches that you ride your bikes down to, and you say, this is our spot, because we know how the swell breaks. We know where the sandbars are, and this is the spot. Trading's no different. Absolutely no different. You're going to find a familiarity with the things that you trade. And again, it could be stock, could be futures, could be options. Bottom line is, you need to kind of get familiar with the behavior, just like your dog, right? Your dog has certain actions that it does, patterns. So does the market. Market says, yeah, ES is good around the clock. I would say ES is a great trading vehicle. However, not necessarily around the clock. It does trade almost 24 hours a day. However, there's certain times of the day where the volume is gone, meaning there's nobody trading it. Very, very low volume. And that is another risk factor to you. Harrison says, day trading is like navigating Bay Area traffic. That's how I look at it. I think navigating Bay Area traffic is probably a lot easier than being a day trader. Definitely. And then, this is a tricky one. My audience a lot of them come from Trading Academy, which is where one of the schools I teach for. And they have a supply and demand methodology that they teach. And I think a lot of the audience here understands that methodology, but you may use something else. So I would say, what strategy are you using? There's things like the opening range breakout, where you wait 15 minutes, you let it establish a high and low, and you trade the breakout. There's some that trade right as the market opens. There are other traders who are using indicators like Bollinger Bands, MACD, stochastics. There's all of these quote-unquote tools that may help you time your entries, time your exits. But the goal of all of that is simply to have you write down your plan. And so you do the same process every time, modify it occasionally, but don't be trading different things every day and switching styles every day and switching times every day. You will never achieve consistency. And I know I'm speaking for myself here, but I'm pretty sure a lot of the audience members would nod and validate that if you're doing something different every day, you're never going to get consistent results, right? It's about finding your niche, finding what works for you, and going with it. Now, for me, I've got my own thing that works for me, and that may not work for the audience here, and they understand that. At least I hope that you guys all understand that. You've got things and ways that you trade that works for you. Let's see, what else I have on your list? I already asked what your trading plan was. And, one thing that you're going to have to figure out is, what do you want to trade? I'll tell you this. As a new trader, when I first got started back in the day, I wanted the most volatile thing I could sink my teeth into, right? Show me the thing that's moving the most, because that's going to make me the most money. Now, unfortunately, that sword is double-sided. And I would encourage you to look for stocks and trade for consistency, something that doesn't have these big swings. This is in green dashed line here I just drew. You want something that moves but fairly consistently. What you don't want to get involved with early on is something like that, where it has huge swings up and down. Because as a new trader, I know for a fact that you do not have discipline. You do not have risk management, because you don't know what you're supposed to do. So until you get your risk management down, you understand how you deal with losses, with stress of being in a losing trade, when your palms go all sweaty and you sit there and just rock back and forth and stare at your screen drooling on yourself, until you understand how to deal with those situations, stay away from the volatile stuff. Right? When someone's out there telling you that you got to go out and start day trading circle, run away. Idiots. I brought this up on my show, and I'm feeling bad for it, because the thing is so unbelievably volatile. You shouldn't touch this stuff. Jidby says, what can you say about NVIDIA? I learned there's insider trading in everything. There's always insider trading, Jiddy. Insider trading is just a part of the game, right? This industry, I often joke, and I do think that there's an air of seriousness to this. I say the most corrupt, deceptive, evil business in the world, other than financial services and banking as an industry, is trading. Other than government, is trading. And I think some of you probably would agree with that. Politics is the most corrupt, garbage industry possible. Unfortunately, there's not enough good people trying to do the right things. But as a trader, you think that JP Morgan and BlackRock and Goldman Sachs are altruistic and really honest and straightforward and are there for you to help you out? No, they're there to turn a profit and make some money. So you've always got to think that everybody's against you. Now, it's a safer way to go. Don't open your eyes and think that all your friends and things are going to try to make you money. They're trying to make themselves money. I try to, on this show, be very transparent. When I say I'm in specific trades, I'll show you the trades that I'm in, so I'm not trying to front run anybody. I just want to be transparent. Most people in this industry give you false claims, false rates of return, and they do it all in paper trading and say they're making a lot of money. Another thing for anybody who's new to this industry is when you have somebody who's always bragging about how much money they make. A good example is Warrior Trading, right? Warrior Trading. If you look them up, I think that they're a scam, dude. The guy every day posts a video on YouTube. I made $50,000 today. I made $100,000 today. That is technically illegal. You cannot do that type of thing, because to make claims, if I were to say I make X, Y, and Z, I have to say that this is not your average returns. And I have to verify those returns. So I think things like Warrior Trading deceive people into believing this is extremely easy. So Mr. Penny Stock, garbage. Stay away from him. Too risky, right? Margaret knows. Margaret's been here a long time. She knows that the key to consistency is finding something that's got a nice range or a predictable pattern and applying your rules over and over and over again. Rinse, wash, and repeat. It does not, every time that we make trades, it doesn't mean that they work 100% of the time. You know, if you can get to a success rate of, let's say, 60% of the time you win, you're going to be golden over time as long as you have good risk management in place. So, I don't want to spend too much more time on this. I've already been on it for about a half hour. You know, when you look at styles, I would definitely say that day trading is the hardest. It sounds the best because you're in, you're out, and who cares what Trump says on TV or Putin does or war? It doesn't matter, right? You're just trading for the moment. It's much harder because remember, if I'm a swing trader, I have the benefit of a couple days to a couple of weeks to let price move. Therefore, my range can be much bigger. If you're day trading, you're probably going to have like 1,000 shares at a time of a fast-moving stock, which opens up your risk to you. Can you make a lot of money in a short period of time? The answer is yes, you can, with a capital C, capital A, capital N. But do you always? No, absolutely not. No one I know has been an extremely consistent day trader at a high level every month their entire career. They go through big swings up and down. The key is to have stop losses and risk management in place so you protect yourself. So if I was to give you advice, Mason, it would be don't be a day trader. What I would say is learn how these markets operate, and maybe you start looking at just the mechanics of the market. Maybe you watch this show or someone else on technical analysis so you can see how charts work. And then start off as a swing trader. All right? Start off as a swing trader and just maybe paper trade a couple trades that go days to weeks. And once you can prove that you can actually make money on a swing trading basis, then maybe take a small amount of your capital and try to day trade. It's fun, it's exciting, but it's extremely stressful. I mean, it's very stressful. It sounds too good to be true, and I would argue for the vast majority of people, it is too good to be true. Especially with all the propaganda and BS you see on social media telling you how great and easy and how much money they're making day trading. They're not. Statistics show, at least when I did, there was a research report by Bear Stearns. And Bear Stearns said that 97% of people that do this fail. 97% of people that use this, that day trade, fail. That should be your statistic, alarming statistic right there. Okanola says, what about starting with the micro ES on Globex? Yep, you could do that as well. But I think when you're starting out, especially brand new and 15 years old, let's face it, guys, most of you are in your 30s, 40s, 50s. You know the markets have been in your ears your entire career. Mason's very young and doesn't have that benefit. So I think that, you know, he's going to be manipulated and swayed by his peer group and his friends telling him how much money he's making. But if he actually had insight into their trading accounts, you would see that they're losing money. So I would say start bigger picture, go slower. And then once you get comfortable and you understand it, you have working knowledge, I live across the street so you can ask me questions, then you start to migrate into maybe more active if you wanted to, but start slower, right? You are in a very fortunate position, and everybody in here would agree. You can type in, after I make this statement, type in agree or disagree. My statement is that if all of us got started with an interest and understanding of the financial markets at 15 years of age, following a plan and everything I just outlined, that you would be far wealthier than you are today. Would you guys agree with that or no? It should be straightforward. All right. Let's see. I use a robotic trader that uses AI to measure certain indicators that if it drops, triggers a buy and sell. When it goes up, triggers a sell. Make it run. All right. I'm not a big fan of AI systems. You can do all that yourself. You can go look and see what things drop, certain percentage, etc. I'm not a fan of AI. I think that AI is a gimmick. I think AI is just like the dot-com bubble with regards to trading. There is no system that you're going to turn on that's going to be making you money consistently. It would never sell it. All right, Mason, look through the chat. You see a bunch of agrees there. You're fortunate. You're fortunate. Yeah, Big Eb, I'm calling BS on the 1% per day. Calling BS on you, TD. Sorry. I think you're probably working for a company selling robotic trading systems because no one's making 1% per day. Not consistently. You know, not happening. Been doing this way too long. So don't be PM or direct messaging people trying to convince them that they need to buy into some AI system that's making them 1% per day. It's BS. It's garbage. Not happening. All right. there you go, Mason. Again, I want to do something real simple for you. Explain at least some of the realities of it from a straight, honest perspective. Yeah, it's tough. And especially at school, you've got people who are day trading penny stocks because you might have 50 or $100 or $200 a trade, and that's all you can really get in with their into is penny stocks. Unfortunately, your consistency is going to be almost impossible because most penny stocks are a penny stock for a reason. They're down that much because they're probably going to go bankrupt. Most will be there. Now we can hold a discussion on the 1% thing. All right, let me go to our monthly wrap up because I want to talk about the performance for June, which was pretty darn good, I have to say. Out of our 8 markets, I'll start at the bottom here and work our way up to the top. So, 10-year bond yield dropped. Surprising to me. I've been a believer that we're going to see that 10-year yield actually creep back to the upside, but it's starting to look weaker and weaker. There it's down 3.73% for the month of June, and you can see it's coming right back into these lows. It would not surprise me to see it drift all the way down to that 4.16 down to 4.13 level. If it doesn't hold there, then the trend would tell you we're going to hit those lows back at 3.9%. I'm surprised to see it, but again, President Trump has said I want those long-term rates to drop as well as the short-term. Maybe it's that invisible hand of government. Yeah, Big Ep says the sub 4% coming again. It would appear so, right? Trend is your friend, or the bend at the end. I was optimistic because it felt like we had a higher low thing going on here. But once you broke that 4.32%, my optimism has waned significantly. So not looking so great there on the 10-year. 3.73% slide for the month of June. Moving up the list, dollar index. Another reason, right? As bond yields drop, the interest in holding dollars because the carry trade disappears, the value of that carry trade. And here's your dollar index. This to me is probably the most interesting chart we've got for 2025 because it just has not been able to find legs. It just continues to slide over and over and over again. Today you're down 0.46%, closing at 96.80. As I zoom out here, I've got a couple different levels on this screen. The big one is down around 93, but you could argue that there's a spot right around 95.80 for this to drift down to. But that bottom, which was right around 100, almost 100 on this, we're long below that, and we were above that for over 3 years. Now all of a sudden we're below it. You just got to keep thinking we're gonna head lower, unfortunately. Okay, now we move up a little bit more positive, and we get to gold. Surprisingly, ending the month, even though it's been very volatile, I'll bring this up to a monthly time frame just to make it easy. Let's put this on a monthly. Boom. So now our candles are 1 month. That makes it a little clear. After that gigantic rally from 2022 all the way through early 2025, hesitating, right? We had almost no change last month for the month of May. June had almost no change. It was up 0.12%. But what concerns me about this one is it's kind of a shooting star pattern. It looks like a shooting star on the monthly, which we'll see where it ends today, but that's not very good. Shooting star pattern is obviously bearish, especially after a really big run up. And you would think that the weakening dollar would actually be pushing this higher, but it's not. And again, we have that one of those relationships that's just kind of breaking as we speak. All right, keep going for June. Bitcoin, 2.8%. Not what I expected. I thought we'd see more upside potential here. I thought we'd be at all-time highs by the end of June. I was pretty certain about that, but I was wrong. Today, right now, we're sitting at 108. 108, 235. Close. That all-time high you see on the future side of things is 112,345. And let's see, next on our list, as I run up here, the S&P 500. Now we get some big numbers, right? These equity indexes looked great for the month of June. 5.59% pop for the S&P, which, if you look from the low we established in April to we're roughly where we're going to close today, you're looking at a 29% move up in the S&P. That is phenomenal. Granted, for the first few weeks of that rally up in April, I was not a part of it, and then I've been on it ever since, and it's made for some very great rates of return, especially using leverage and having the option side of things give you leverage. So that is phenomenal for the S&P 500. We are obviously at all-time highs, and it just keeps on rolling. Now, Russell 2000, not looking so good. Obviously, Russell 2000 is small caps, smaller ones. That monthly doesn't look that great. Really not fantastic. Even though it was up 5.82% for the month of June, still not at all-time highs. And everything else seems to, except the Dow and the Russell, is at all-time highs. So, not a good sign. I'll keep going on here. Crude oil. With all the volatility, this was to be expected. I'm going to zoom in here again. That long topping tail there on crude oil. Let me get rid of some of this stuff. I think this was our head and shoulders I had drawn in here. That's now long gone. I had the measuring object. Really, obviously, super long tail here. Not that great. However, where we're closing is 6.88% gain for the month of June, which is fantastic. And that leaves the Highlander. There can be only one, and that is the NASDAQ 100. Again, I think Margaret was asking what's driving the market higher. It's a Magnificent Seven, right? 6.97% gain as of an hour or so ago. It might change, but 6.97% for the NASDAQ 100. The chart looking absolutely fantastic. And when we look at our Magnificent Seven, it's easy to understand why, because you look at something like Microsoft. Look at that monthly chart of Microsoft. Microsoft's monthly, I'll get you real numbers here, 8% gain for Microsoft. That's beating that average. Now, Tesla was down for the month. NVIDIA having a monster 2 months in a row. NVIDIA is up 16% for the month, 16.92. Let's see, we had Meta on here. Meta also a monstrous month. So thank you, Magnificent Seven. 14% gain for Meta for the month of June. Just fantastic. Now, what are some of the other laggards doing? Well, even Google, which I've been a little bearish on because of their legal issues, 2.62%, so underperforming the market. Amazon, I didn't get Amazon clicked. Amazon right there, another good month for Amazon, 7.1%, so pretty much what the market did. And then you have Apple, which has really been languishing. It has not done much. It was up 2.15% for the month. So that's your Magnificent Seven, driving things higher. 2 monster months in a row for the S&P, absolutely. And it's like, those are huge months. I mean, these are not tiny months. And I know it's not a double-digit one, but I mean, come on, S&P, if you're pulling 5.59% in the S&P in a month, considering the average annual rate of return is about 9%, this is great. It's really, really, really good news for those that are holding long positions. All right, trades. Where are we at in time? Oh, man, time's flying. So I did make a... It's been a day trader's paradise since January. Well, I would argue as long as there's volatility, Irish, it's always paradise, right? As long as you got volatility. Oh, good to see you, Lisa. Was listening on my phone. Yeah, thank you. I hope that helps. I know most of you guys understood all of that and maybe it was just kind of reinforcing the rules. But I'm hoping that for Mason or anybody who's brand new, particularly younger, that they take that to heart and understand that there is challenges. It's not just easy as cake as the media would make it seem. So trades that I'm in. Let's just go over this real quick because you guys keep asking more and more for me to talk about the trades I'm in. I'm still holding 600 shares of MicroStrategy. That was good today. We saw a 5.3% gain on MicroStrategy today. I sold the 110 calls expiring Wednesday, right? Expiring on the 3rd. Actually, no, that's Thursday. Sorry. Expiring Thursday, I sold the 410 calls, collected $2.11 worth of premium. So that's about a 0.5% gain on top of whatever it was. And again, my exit price here, if I were to be filled on this one, is $410. Remember, I have 300 that I bought at $400, and I have 300 that were bought at $375. So ideally, just like last week, it'll close just below $410, and I can roll those again next week. So I've been pretty good. I also sold some Tesla. I sold the 305 Tesla puts today. Let's go 305. I do not have a current position open. I sold the 305s, and the main reason I sold 305s is these expire Thursday, and if it 305, I collected $3.05 worth of premium. So basically, I'll make 1% rate of return this week, at least for the next 4 days, regardless of what happens to Tesla. Ideally, it stays above 305. So there's the second trade. What else did I do? USO. I mentioned last week that I think that USO is still poised for some upside movement here, even though that whole issue with Iran and Israel seems to have calmed down significantly. I did sell the 71 puts again, expiring not this Friday, but the 11th. I went out a little bit further, so a week and a half, week and 3/4. I collected 86 cents worth of premium on that, so that's over 1% rate of return. It averaged about 1% rate of return per week. And then the last one, which is a smaller position, but it was still, natural gas had a pretty big dump over the past week and a half. UNG was over 18. Today we found ourselves down around 15.25. So I sold the $15 strikes, collected 20 cents worth of premium, expiring this Thursday. So I've got 4 days to make about 1.25% rate of return on that UNG position. And there they are, in case you want to know what I meant. So there we go. There we go. All right. Michael, I'm afraid to look at the chart of CLOV. I'm afraid to look at it. I know your type, CLOV. Ready? I'm guessing a 30 degree downslope. Oh, would you look at that? Bada boom, bada bing. I don't like it. Michael, I don't care what this is getting added to. He says CLOV is joining the Russell 3000. Is good news that the 160 million of cash with no debt. Yeah, sure. It's great. It's great that it has no debt. It's great that it's being added to the Russell 3000, which honestly, Russell 3000 is really micro small cap stuff. But what's the trend? What's the chart telling us, right? The chart is telling us this thing is going lower. The trend is your friend until the bend at the end. So unfortunately, I'm just not a fan of the chart. And again, not to take away from the business, Michael, I don't know anything about Clover Health Investments, but that chart pattern there tells me leave it alone. It tells me I have a higher probability of making money if it goes down. Now, you also said, is UNG today buying for a bounce? Yes, it is. I'm anticipating more Middle East conflict, and I do think that that'll escalate a little bit. I think that's going to pop crude oil, which is why I sold puts on USO. That's also why I sold puts on UNG. UNG is not the best looking trade, right? There is no real, nothing that significant other than the low point here, which is $15. If you go back to this low that we saw on the 24th of April of this year, right? We've bounced off this twice. So to me, it feels like it's going to bounce again. However, same situation as what you've been looking at, Michael. This does look bad because you're making lower highs. The difference here on UNG versus what you showed me is this at least has been hitting this floor multiple times, right? And Margaret's totally correct. It's not fresh because you could argue that the original demand zone was back here because of the gap up and go. That, when I say back here, that's December 26th of last year. We hit that same level at right around $15, $15.30 on April 24th of this year. We hit it again last week on Thursday, and now we're back at it again. So it's not the best trade. This is not a great trade in my opinion at all. But I like UNG. It's got a lot of volatility, so I do have a smaller position there. But it's not a large position in my portfolio. Just playing around with it, but sharing you guys with my trades. And I think I posted that earlier in the Discord group. I realized I made a big mistake, and I let the Discord group, you could just click on it and you could join automatically. And there were 2 people in there with my name, which is pretty ridiculous. Again, make sure you guys are careful. No scammers. I'm not going to contact you. I'm not going to ask you for money. I'm not going to manage your trades. I have no interest in managing your money at all. I do have an interest in just talking markets with you guys and hopefully helping you just by education and content that way. Anytime a company joins the Russell 2000, that buyers come in today and was just asking about, well, I wouldn't say that any time that there's a just definitive reaction. Typically, when you add something to an index, so whether it's the Russell 3000 or the S&P 500 or the NASDAQ, when you add a new component, there's usually a surge up until it's actually added. And then whatever gets removed usually has a sell-off, right? So in theory, there could be some upside movement here with CLOV, but right now, that chart is telling me I don't want to touch it. It just keeps going. Sorry, Luis, the person that contacted you was not me. Not me. I always encourage you guys, if you have questions, my email's on your screen, tradermerlin@gmail.com. So if someone's approaching you, just email me and go, was that you? It's not. I'm not going to reach out to you and ask you for how your account's doing. I'm not going to ask you for your cryptocurrency wallet addresses or anything like that. Ugh, drives me nuts. No, even he's not that petty, Margaret. Even Voldemort's not that petty. But his sales team might be. Okay, what do we got here? Let me wrap up. I had other things I was going to get to, but I can't remember. I guess... No, I guess I won't be selling my forest. You get a forest? Wait, hold on. I might buy a forest. Exactly. And Michael, that's why I'm playing UNG. He says it looks like UNG is bouncing off the 15. That's the only real reason I'm playing UNG at $15. It's lower than the current prices now. It's definitely not a good looking trade. I will say that. It's not a good looking trade. But I'm okay taking a risk, and that's part of life as a trader, right? I have to assess risk and say, is it worth it to me? You know, even Tesla doesn't look that great right now. This is a daily chart of Tesla, but you know, if it dropped down to 305 by Thursday, okay. How far does this have to drop before that? I did it earlier this morning. Tesla would have to drop about 4% to get down to the level, and that means I'm also going to buy Tesla at 1% lower. So technically, if it got to 305, I'd be buying 5% lower than current price, and I'm okay with that. And we'll see. We'll see how it goes. I mean, obviously, it's trading down in the after-hour sessions at 315 right now. You guys know I'm a long-term bull on Tesla, so I'm okay owning that one. What are some of the other ones? I'll leave it at that. I guess I need to do more gratuitous plugs. As you guys know, I will be in Las Vegas. I'm going to be there. The conference is the 14th or 15th through the 17th, but I will be there on, let me just really make sure of the date. I'm going to be there on Monday, and I get there early. They asked me to be on a panel. So if you guys are going to the Vegas event, I'll be there on the 14th on a panel. My class I'm teaching for them is a 2-hour class on cryptocurrencies on the 15th, and then also on a panel on the 16th. So I'm going to be around Vegas the whole weekend. So if you guys are around, you're going to happen to be there, let me know, and we'll connect while we're there. There we go. And that's about it. I'm gonna wrap things up. That was it. So I hope that Irish, you're gonna be there. Cool, awesome. Well, definitely introduce yourself. I'm terrible with names, so thank goodness you have badges and name tags on. Nope, I did not buy cold. Nope. Cold. Pro shows. Oh, ultra nuts. No, I don't do ultras, especially if I'm doing swing trades. So you know, with these leverage instruments like ultra pro short, you know, those doubles and triples. No, not worth it. You know, and here's why, Michael. If you look at this right here, going back into April, cold has done nothing, right? It's actually losing value compared to UNG because it decays every day. Yep, it's the other side of boil. I love the ticker symbols, cold and boil. But now, typically I don't, especially if I'm doing a swing trade, and I think this UNG might be a swing trade. This could be a trade that once I get exercise at 15, I'll sell covered calls against it, and if we get a rise up in natural gas due to conflicts and demand, then I'll be okay there. But no, I generally don't do leverage ETFs. But that's just me. You know, as long as you understand the risk of leverage ETFs to you, of holding them over a long period of time, that's the most important part. All right, that's going to do it for me, everybody. Thank you guys so much. If you have something you want to discuss tomorrow, let me know. Email me. You can send it to tradermerlin@gmail.com. Mason, hopefully you enjoyed that. Hopefully you learned something. You're not here today. I was hoping you were watching and going to engage with us today. But Mason, good luck to you out there. And, you know, just let me know if you have any questions. I've got a pretty good audience, so I would encourage you to join and watch on a regular basis and ask questions. I'm not going to make a show dedicated to day trading, etc., but I'm going to answer your questions along the way. No, never started, Margaret. My brother never got started. Nope. Oh, a long story there, but we'll keep family out of it. We'll just let it go. Anyway, thank you guys so much. Have a fantastic remainder of your day. If you have any questions, email me at tradermerlin@gmail.com and let me know if there's anything you want to discuss. Have a great day tomorrow. Oh, wait, whoa. How could I not tell you the news for tomorrow? Goodness gracious, Merlin. You guys all got to be on your P's and Q's tomorrow at 9:30. Okay, this is 9:30 East Coast time. Wait, why is this all screwed up and wonky here? This should be... Yeah, 9:30 East Coast time. So this is right as the markets open. You have Governor Bailey, Ueda, and Chairman Powell will be speaking. They're speaking at this conference in Europe, so be very, very careful tomorrow, right around 9:30 in the morning. The open could be wild, absolutely wild. Anyway, that's it for tomorrow. You do have JOLTS job openings and ISM manufacturing prices, construction spending, but really all eyes are on the unemployment number coming out Thursday. It's usually Friday, but markets are closed. So, all right, that's it. Take care, everybody. Have a fantastic remainder of your day, and I will see you guys tomorrow.